Hi, this is Editor's Take. I'm Sakshi Batra, and with me is Gaurav Choudhury, is the Deputy Executive Editor of Moneycontrol, and we are going to be discussing about the core sector data that has been released by the government last evening. Thanks a lot, Gaurav, for joining in. Well, the core industries have grown at about 2.1% in the month of July, which is a sharp fall when you compare it with the year ago July, growth of 7.3%. So first, we have already seen the GDP data just like a few days back, and now this. Does this actually indicate how far and deep the slowdown has actually spread?
Well, the thing is that the core sector data is for the month of July, and the GDP data was for the period from April to June.
Correct.
The very sluggish growth in core sector does tell you one thing, that the slowdown continues to persist beyond June. And so if April, June was 5% so far as the GDP growth is real GDP growth is concerned, July and September, at least from the month data for the month of July, does show that things are not really brightening up.
Right.
If you break down the core sector data, you will see that while cement has grown a bit, the growth in steel, which is a key intermediate product, has actually slowed down. And 4 out of the 8 industries which are captured in the core sector data, which represent about 50% of the country's factory output, their growth have contracted. That's not a good sign. It does tell you that there is a persistent slowdown in the economy, in construction activity and also in production activity, and that needs to be reversed, because these are intermediate products which are used for production of other goods, and if production of these goods are not taking place, or if it's growing at a very sluggish rate, then that is not a good sign for the broader economy. And if you juxtapose this data with what has come out in the Purchase Manager Index data for the month of August, which has come at a 15-month low, that's not a good sign, because the PMI index does tell you that demand slowdown persists, which is because of lower sales.
Absolutely. Now, if I have to just talk about from the beginning of this financial year, you talk about the core industries which grew at about 5.2% in the month of April. It fell to 4.3% in the month of June, and sharp fall was seen in the month of in June in 0.7% growth in core industries. So month on month, if you compare from June to July, there is a slight uptick. So that gives you some bit of a comfort that at least we have touched the bottom, or is there still uncertainty there?
Yes, so sequentially it has grown. In the month of June, it was at a 50-month low, 0.7% core sector growth. Compared to July, it has grown a bit. But we need to see this from a seasonal point of view. We have to compare July to July, because there is always seasonality in the production of these goods. And if you compare this July with last July, the growth is extremely sluggish. It has slowed down considerably. That is something that the government will probably keeping a keen eye on. And this is a reflection of what is actually happening at the shop end level, and also what is happening at the construction level. So there are certain things that the government needs to do immediately. For instance, the government will have to front load many of its budgeted expenditure and start spending that money now on projects. Say, for instance, if the government had set aside a certain amount of money for building roads, and probably that money would have been exhausted, or those funds would have been exhausted, say, by the month of March, that money will have to be now spent now. That is, the construction, the government financing of projects and construction of these projects should be front-loaded now. That expenditure will crowd in private investment. In the absence of private investment taking place, it's the government that will have to do the heavy lifting, especially in construction activity, because that would mean that cement and steel production will go up, because the intermediate products, if the government starts accelerating in the construction of roads, for instance, it will have a direct positive benefit on the cement and steel industries. And that is something that the government will have to seriously look at.
Absolutely. And I have to ask you about, now we have been for a long time speaking about the falling auto sales. We have been talking about the sluggish demand in the consumption sector that we have been witnessing through the sales of consumer durables, or even the FMCG sector as well, which has not been seeing the uptick in volumes for the last few months. But this is actually indicating that the demand is also falling at the industrial level.
That is clearly now it is now showing up. It is showing up that the intermediate industries, which like cement and steel, are now getting seriously affected. And if their production continues to go down, and if many of these 8 core industries remain in contraction zone, it's a clear sign that the slowdown in demand at the shop end level, like automobiles, etc., actually is now permeating to the intermediate level also. That is not a good sign, because these are capital goods industries, which serve as a proxy for measuring investment activity. And now, if production of these goods are decelerating or contracting, it's a clear sign that investment activity has gone down significantly.
Now, government has in the past week actually taken a whole lot of steps as well. You talk about the reforms in the FDI. You talk about the making or strengthening up of the banking sector by consolidating them, by recapitalizing the banks as well. Any of these measures that could actually push the demand in the industrial sector?
So there's a lot is expected so far as the automobiles are concerned. Government expects that the vehicle industry sales and demand will start picking up once the festival season demand starts kicking in. But that is again something that the government, that the automobile industry and the government will be only hoping, because demand eventually, the decision to buy a vehicle lies with the consumer, with the household, and there are many determinants of that. Say, for instance, will the consumer decide to buy a BS4 vehicle instead of waiting for 6 months and buy a BS6 vehicle? Does the consumer feel confident of his or her ability to finance a vehicle over a 5-month period? These are key determinants. But having said that, the government has signaled the right intent about its intention to turn around and revive the industry. That is one part of it. But as I said, there is severe weakness in private investment activity now. And in the absence, in such a circumstance, it is for the government to do the heavy lifting. The government will have to crowd in investment by front-loading its expenditure, and if necessary, raise its expenditure a little more than what it has budgeted for.
Absolutely. Thanks a lot, then, Gaurav, for sharing all that insight with us. Well, it is the onus is on the government right now to actually take all the measures which are needed to push up demand, both at the industrial level and also at the retail level. So far, the government is showing the intent, is walking the talk by taking a lot of steps, but expenditure is something that it will really have to focus on right now. Thanks a lot for watching this edition of Editor's Take, and do stay logged on to Moneycontrol.com for more news and updates. Thanks for watching.